Amazon.com just reported their Q2 earnings, and if you're looking for analysis on all the revenues, the cash flows, the balance sheet, the different business segments that Amazon runs, and then a look at the technical chart, you've come to the right place. What is going on, investors? Hopefully, you guys are doing well out there. Time to talk about Amazon.com highly anticipated earnings report, which came out after the bell. That's because over the last year, this stock is down 32%. Year to date, down 28%. That includes a 1% rise during the regular session today, and then after hours, after reporting earnings that not only beat expectations on where they're at in Q2, but we also got guidance for Q3. All of that looks incredibly bullish for Amazon, at least in the shorter term. The revenue estimate before earnings came out for Q2 was $119.2 billion, or 5.4% year-over-year growth. Amazon delivered $121.2 billion, or 7% growth. That beat expectations by about $2 billion. That is one of the reasons why the stock is moving in the after hours. Some of the things that I was watching for immediately when the earnings crossed over at Amazon was the CapEx burn on the property, plant, and equipment. This quarter, it was $15.7 billion, and it was $14.3 in the previous period. When we come over to the cash flow statement, I'll show all of that information to you. We were looking for AWS growth as well. That was up 33%. That's absolutely phenomenal growth that you're getting out of the AWS business unit as well. We'll go through all of that. We were looking at for inventory build, and while inventory built a little bit up from the beginning of the year, doesn't look like Amazon has necessarily the problem that we're seeing at a Target and a Walmart. Then we're looking for advertising growth. That's another high margin business that's well on its way to being one of the largest businesses over at Amazon. That grew 21% year over year. When you look at the growth rate over at Google, when you look at the growth rate over at Facebook, certainly 21% growth on that ad business over at Amazon, certainly good as well. And then finally, we were looking for Andy Jassy leadership. Weren't sure we could trust this guy, at least in this quarter. He delivered, came in with that $121 billion worth of revenue. But more importantly, we got third quarter guidance. That's the upcoming quarter for Amazon. Net sales expected to increase to 125 all the way up to potentially $130 billion. Obviously, Amazon has insight into this quarter quite a bit because they just executed on Prime Day, which sales will reflect in that third quarter. So they obviously had a great Prime Day, and that bolstered up the guidance for the upcoming quarter. Again, expected to become 125 to $130 billion worth of revenue. The consensus estimate for the Q3 was closer to $126 billion, or quite frankly, towards the low end of the guidance that Amazon had. That was 14% growth. So this company, just like we've seen with a handful of other major tech stocks like Microsoft and Google, doing just enough to meet the forward guidance, which quite frankly, even I was skeptical if they could grow back into a mid-teens grower for Q3. It certainly brings onto the table that this company is probably fully capable of delivering low teens growth for the fourth quarter. And quite frankly, that's what Wall Street is expecting into the future, essentially a mid-teens grower over the next couple of quarters over at Amazon. That I don't necessarily think was priced into the stock because, as we talk about in the after hours, up over 11%. That's after being up over 1% today. And quite frankly, being down here near 52-week lows just a couple of weeks ago, nearly 30% lower on this stock over just the last 30 days or so. This stock up over 30%. Now, let's jump into those numbers over at Amazon. So we have our 3-month period here. Is it as glorious as things look when a stock goes up this much in the after hours? Or is this quite frankly just Amazon beating the lowered bar expectations that people might have had? Now, we had total net sales last year at $113 billion. Those have ballooned to 121.2. And again, for the upcoming quarter, we're expecting between 126 and 130. What we've been watching very closely over at Amazon, and quite frankly, any company that has, I think, over 1 million employees, certainly going to see the impacts of inflation. We see cost of sales up fractionally, quite frankly, year over year. Fulfillment cost continuing to rise. Technology and content, you saw a big investment over the last year in terms of Amazon's content library with the fact that they now have, I believe, exclusive rights to show an NFL Thursday night game. And they obviously bought MGM Studios, which owns numerous TV shows and movie rights. You see over the last year, up nearly $5 billion to this $18 billion mark. Sales and marketing also ticked up as well. You probably had some Prime Day advertising that appears in Q2 to get, obviously, the consumer and aware of Prime Day coming up in July. So you probably had a little bit of acceleration in terms of that marketing. G&A up fractionally year over year, but our total operating expenses across the board, we saw our expenses go up from 105 to 117. So we grew these expenses by more than $12 billion. That did not offset our roughly $8 billion addition to the top line. So you guessed it, our operating income over at Amazon shriveled up, went from 7.7 to 3.3. Now, obviously, investors are willing to give them a pass on these types of things, but at some point, you obviously need this to start turning around for Amazon, get those operating profits to start turning back in the other direction. Having them cut in half year over year certainly is not going to fly with investors a year out if that same trend happens. Amazon will have to respond by either cutting cost or raising prices on their different business units. We'll see if they have to reach those decisions in the coming weeks ahead. Now, when you pull down all the way to a net income number, it looks a little ugly. They had I believe a $3.2 billion loss on the Rivian stake. They have some other losses baked into this other income as well, not related to running Amazon.com and the AWS businesses that they operate. So when you pull down to net income, it's a complete disaster. Most investors are going to focus on the top line revenue growth, which came in over expectations, and they're going to couple that with the fact that the upcoming quarter looks like we're coming well above expectations, especially if come towards the high end of their guidance. They'll come way above expectations for the Q3. And again, Q4 looking a lot more certain over at Amazon to hit $156 billion worth of revenue growth, which would be north of 13% growth on that business unit. Now, when Amazon presents you their financials, they actually start with the cash flow statement. They want you to see this first. I tend to back into this after we look at the profit and loss statement, because we can understand when you pull down a negative $2.02 billion on that net loss side, you realize that not all of this comes from operating the business. Last year, you pulled down a stellar $7.8 billion net income. You get to add back in things like depreciation, stock-based compensation, which really ballooned over the last year, and you pull down to your net cash provided by your operating activities went down from 12.7 down to about $9 billion. You'd expect with the rising cost that Amazon experienced that they weren't going to be able to make that up over in cash flows. And so another line item over at Amazon that quite frankly needs to get a lot better, probably in the shorter term, in order to maintain the price that this stock is starting to trade at in the after hours. We talked about how one of the things that I was looking for before the call and before we saw these earnings was the CapEx burn over at Amazon. And we see in the most recent quarter that came in, at least in terms of property, plant, and equipment, at about $15.7 billion. Last year, you were at 14.3. And then Amazon also executed on their buyback as well. $3.3 billion worth of shares in the most recent quarter, about $6 billion even over the last 6 months. They did some issuance of some short and long-term debt, and they paid some down net. You will see when we get to the balance sheet that Amazon actually increased their debt over the last year and decreased the amount of cash that they have on hand. We see last year, or quite frankly, 6 months ago, basically the beginning of this year, you had well north of $90 billion worth of cash. You also had about $32.6 billion worth of inventory. Flash forward about 6 months, and now you have just $60 billion in cash. You have about $6 billion more in inventory, but again, factor in that this is not necessarily a comparable comparison, considering you're comparing to the end of the year when you'd expect e-commerce stores like Amazon to flush through quite a bit of inventory heading into the end of a Q4 holiday season. Now we're heading into Prime Day and obviously back to school shopping, and we're kind of on the doorstep of Q4 holiday shopping. You'd expect some inventory build in this quarter. It's not nearly as much, quite frankly, as I thought they would build up. Now, in terms terms of that long-term debt that we talked about. I told you that we had an increase there. We had $48.7 billion worth of long-term debt at the beginning of the year. Now we're up another $10 billion to $58 billion. Not overly concerned with that as well. Now we move on to some of the segment results. We've been keeping a close eye on this over at Amazon. We have our North America net sales really accelerated. And again, this is before Prime Day. Okay, so people were in the shopping mood. You had $67.6 billion worth of sales last year. That accelerated all the way up to $74 billion. Now, unfortunately, we're still not making money, but we're essentially at break even here. So if you factor that in, let's factor in that Amazon is going to come in at least at the midpoint to the high end of their upcoming guidance. If you couple that with the fact that operating expenses, if they can maintain those as well, the increase in sales in the upcoming quarter could spin us back to an operating income in the North American division. That will be good because when we look at international, it paints a different story. We have declining sales year over year internationally from 30.7 down to 27, and we have operating expenses not budging much from 30.4 down to just 29.9. So instead of swinging an operating income in our international business over at Amazon, we actually lost $1.8 billion. Now, the all-important AWS, this is where all the profits come from in this company. In fact, these more than make up for the losses that you see in the North America and international business. Look at the absolute stellar growth that you have here from $14.8 billion up to about $19.7 billion on AWS net sales. And more importantly, our operating income went up by about $1.6 billion from about 4.2 up to closer to $5.7 billion, as long as AWS keeps chugging along at that 30% growth rate. This is a business that is scheduled to double every 2 to 3 years. That means in the foreseeable future, AWS will potentially be on a $40 billion net sales run rate with over $10 billion worth of operating income. That certainly will change the financials over at Amazon if this AWS business unit stays on this 30% growth rate. That is why the common Amazon bullish investor, or the bullish argument for this one, is the fact that if you can maintain AWS growth rate, which again we see in the most recent quarter came in at 33%. Yes, it's down from a previous quarter, but they're maintaining kind of low 30s and occasionally achieving high 30s growth rate on AWS. That means this $19 billion will turn into 40 very, very quickly. You look at some other businesses like advertising services. This is starting to slow down, but that is understandable over at Amazon. You're still maintaining a 20% growth rate. If they can do that for the next 4 or 5 quarters, again, you're looking at a much, much bigger number on that top line. Subscription services, we should expect this to continue to grow as well. You see quarter over quarter, you saw some increase there. Amazon announced Prime membership. That's essentially what subscription services is. It's all the Prime membership here. We should see that continue to accelerate in terms of its growth rate because they passed along a price increase and most customers pay on a yearly basis. So that price increase will take a while to trickle down. You have your third-party services. These are your third-party sellers over at Amazon. This, quite frankly, is the bulk of the value of Amazon.com. There's a lot of websites that have started out there, including ex-Amazon employees, and Walmart famously bought Jet.com. And there's the list of websites and e-commerce stores that have started out there that tried to do first-party sales. That's over here on the top line of Amazon's business. That's the online stores. You see that business basically not growing, especially over the last couple of quarters. Quite frankly, I think it's going to be hard for Amazon to re-accelerate this back into the growth that it obviously saw during the tail half of the pandemic. The third-party sellers are really where the value is because you're essentially collecting commission fees and just facilitating those transactions. You see that seller group actually re-accelerated from 9% growth in Q1 to 13% growth. That is key for Amazon.com, just straight e-commerce profitability into the future. And then finally, physical stores, primarily Whole Foods, you see maintaining kind of a low to mid-teens growth rate over the last couple of quarters, certainly beneficial for for Amazon. All things being considered, if you're buying Amazon for that revenue growth and that AWS growth and profitability, well, Amazon hit it out of the park. They beat expectations on that revenue side, and they beat expectations for that Q3 revenue guide. Amazon AWS continuing to grow at a 30% clip. Not only is it continuing to grow, but it's also continuing to grow rather profitably as well. We also have evidence that out here in North America, in terms of the retail sales, you should see that number potentially spin to a positive. Now the international segment comes into question as that part of the country grapples with higher energy prices and maybe a deeper recession or more serious recession than what we may potentially feel here in the United States. Now, from a technical perspective, this has done something completely different, and this is what we're looking across the board with all stocks, but particularly Amazon. We were looking for it to break out of this sideways consolidation it had been in for about 90 days. You found some footing down here at about $100 per share, and you had some resistance about 25% higher at about $125 per share. Now, it broke out to the top of that range. There should be some resistance on this stock. We identified this on our Amazon preview. This stock found some footing before it made this final drop down to about $100 per share. It had some footing right here in the $130, $140 range. I would expect Amazon shares to have a difficult time pushing up and above here. And even if it does push through 130, it should meet even heavier resistance, quite frankly, up here at about $150 per share. I think more than likely Amazon puts its head up here, but then pulls back in the coming days and weeks ahead. If you get that opportunity, it's probably going to want to try to come back and retest these areas at 125. These areas at 125 could be an area of support, be the first area on a pullback that I'd be interested in Amazon. Now, in the very shorter term, we are certainly making lower lows here, and absolutely after tomorrow, much higher highs on this one. If you get a deeper pullback through 125, we could potentially just come back to this trend line. I would probably absolutely be a little bit more aggressive if I was buying Amazon. I would buy some shares here. I'd be more aggressive if you had a pullback back to this trend line. A deeper pullback to 100, retesting these lows would be somewhat of a back the truck up moment, but understand if we do come back 30, 40% on this stock again from 130 back down here to 100, the news will be bad. Now, I want to remind you though, in the intermediate term, even as this stock pops in the after hours up to these levels at 130, technically some people would argue you're simply still in this channel that is continuing to channel downward until Amazon really pushes up and above that, quite frankly, up into this 150. You have to factor in that this intermediate trend is probably still having some influence on Amazon's share price. So we'll certainly monitor this. I wouldn't necessarily be a buyer tomorrow or next week at these 130 levels. I think you're likely, based on this intermediate trend that's probably still intact with this one, and the fact that this stock has rallied just in the last 30 days or so over 37%, this one is likely to give some of it back, but we are far more ready to buy these givebacks as these stocks, at least in the shorter term, look like they want to reverse trend. That was Amazon, up over $15 in the after hours. Let me know down in the comments what you think about Amazon, and we'll see you again later here on the channel. Good luck with your investments.